Good morning, good afternoon, good Friday, non-farm Friday. Hope you're all well. Hey Ayakame, how you doing? Just want to make sure that the sound is okay. You guys hear me all right? Should be working okay. Alrighty, so thank you all for joining me on this market analysis. We have the non-farms coming up later today. But first, a quick risk disclaimer. This live market analysis is sponsored by Max Global Markets, a brokerage firm that is registered with and regulated by the Monetary Authority of Singapore, the MAS. Max Global Markets has no control over or influence over the content of this analysis, which is generated by myself. The information in this analysis is offered solely for educational and informational reasons and does not constitute financial advice. So before you jump into any trades, please make sure you check your leverage, check your trade size, check your margin. Make sure that it fits with your own trading analysis before you jump into any trades. Okay, what I do or what I've been doing on this live analysis, I've been doing almost every day now for almost a year now, I think, um, is that I share with you my viewpoints on where I think the markets could be heading towards based on the fundamentals and based on where price is on the charts. Right, so we look at it on the H1 time frame, look for some possible trade setups. Um, those are on my watch list, and then if it triggers, I'll jump into it. If it doesn't, or if it comes close, I will also highlight to you on the Discord channel. So do check out the links there for the Discord channel if you haven't already. Okay, if you're new to the session, remember we're a very friendly bunch. So drop a message, say hi, let me know where you're joining us from. And for all the regulars, thank you for joining me. Welcome back to the session. Good to have you with us. If you have any questions at any point in time, please feel free to put it into the chat and let me know. Okay, so do let me know. Okay, it looks like everything's working all right. All right, so I think so we're not going to have a live. So for the last 2 months, right? For the last 2 months, I've conducted live trading sessions for the non-farm payroll. Oops, I've done. Yeah, you're right. Why did the sound go down? Um, okay, I hope that's better now. I don't know why the sound goes down all of a sudden, but it looks like it should be back up now. Hey, Booba, how you doing? Thanks, Angel. Yeah, I think I got it back up again. Um, hey, D-Train, sound is okay. Yeah, I think it's the OBS that's messing with things because on TradingView, the sound doesn't seem to drop. It seems to be okay. Okay, Bua says it's okay now, so let's keep going. Um, I forgot what I was saying. Oh yeah, usually for the last 2 months, I've done a live trading analysis. I've done a live trading session during non-farm payrolls. Um, we didn't end up jumping into many trades during the session, and then also we feel a bit rushed to try and do the analysis before the non-farm payrolls. So I'm not going to do that today. I'm going to go through the analysis today, right now, highlight the dollar strength scenarios, what are we going to be looking at, the dollar weakness scenarios, what are we going to be looking at, and then we'll leave that. And then, if you have any questions during the non-farm payroll or the non-farm employment change, do put it into the Discord channel and let me know. Okay, another reason for that is also because I don't think, and I might jinx myself for saying this, but I don't think we're going to see huge price movements today. Right? I don't think we're going to see huge price movements today, mainly because we just had yesterday. Yesterday we just had the FOMC statement and rates decision. We saw big price fluctuations pretty much across the board. So I think that today might, even with the non-farm payrolls or non-farm employment change number release, it might be a little bit more subdued. All right, might be totally wrong. We might see it rocket in either direction, but I think that it might be a little bit more subdued today. Okay, so hey, Pips Apprentice, how you doing? Hey, Haida, good morning. Haven't seen you for a while, Haida. Good to have you back. Good morning, Goju. Good to see you. So since the last time we spoke yesterday, we did have at 8 p.m. the Bank of England, the BOE, with their monetary policy report and rates decision. As expected, they kept it at 5.25%. No change on rates from the Bank of England, but it is kept at a multi-year high at 5.25%. One bit of surprise is that we did see the bank rate votes change, quite a little bit surprising. It was 405, that means 4 voted to hold, voted to increase, 2 none voted to decrease, and 5 voted to hold rates. We were expecting 2 members to vote to increase with 7 voting to hold. What we had was 3 voting to increase and 6 voting to hold. All right. So because we have one member, I don't know who, with a little bit of a dissent in the Bank of England voting to increase rates, that surprise, right, of one person, one additional person voting to increase rates led to what we saw on the pound dollar on release of the news at 8 p.m. GMT plus 8. We saw the pound dollar shoot or continue its upward move from 1.219, about 1.2194 up towards 1.2225. Right, we saw it push to the upside because of, one of the reasons was because of the additional member voting to hike rates. Although 3 against 6, the decision was still to hold. That little bit of dissent saw the pound dollar push up. It did come back down a little bit eventually, mainly because the UK rates are still at 5.25, and also because, where was it? It said that policy to stay tight for an extended period. Right? So it seems like we're not going to see further rate hikes. Very similar. This is very similar to what we saw on the FOMC earlier on Thursday morning. It seems like we might not see further rate hikes to come from the Bank of England, but it looks like we're going to stay, it's going to stay high for an extended period of time, right? Rate hold with emphasis on long wait before cuts. I don't think rate cuts are in the picture yet. Right now, what we have is, at least we're likely to have seen the end of, likely, not confirmed, but likely to have seen the end of rate hikes. So far, in the Reserve Bank of New Zealand, from the Reserve Bank of New Zealand, from the RBA, from the ECB, from the FOMC, and now from the BOE, all central bankers seems to have paused on further rate hikes, but it is still too early to talk about rate cuts. Okay, so that's why we saw this push up and then come back down. Why it came back down was also because of what happened here on the dollar as it pushed up off that 106 level to the upside. Okay, so that's what happened on the pound dollar right now, still sitting at that 61.8 level, right? And deciding what's the next move. So that's what happened last night with the Bank of England rates decision. We had unemployment claims. I'm not too bothered about that because it is a weekly number. All the way through to today, we have the Bank of Japan on a holiday, but they are talking a lot about ending their current policy stance into next or ending it next year. Um, the main feature for today is the US with the employment number to be released, average hourly earnings month to month, zero point 0.2 to 0.3. You can see that it's all around that range. So I think that even that might come out at 0.2. Non-farm employment change was 336, right? That was a bit of a surprise there last month. It was in October, it was 187, got revised up to 227. Forecasted 171, came out at a 336. So this time round, they're looking at 336, forecasted 178, and then we're looking at the actual to be released at 8:30 p.m. GMT plus 8. Okay, what's your guess? Do you think it's going to? Are we going to see another surprise? Are we going to see a 300 number come out, release later tonight, or do you think it's going to be in line with the forecast at about 170 something? Put into the chat and let me know what do you think. 300 something or 170 something? Okay, so as you are doing that, I'll give you a bit more info about what has happened. On Wednesday, we had the ADP again. I know I'm repeating this every month. The ADP non-farm employment change number is a private number. It doesn't signify, there's no direct correlation to the non-farm employment change number on Friday, but you can get a hint of it, get an idea of it, where it went from 89, expected 149, came out at 113. Okay, why I say it's not a direct correlation is because if you look at October, remember in October last month, non-farm employment change surprised markets with a 336. October last month for the ADP was 180, came out at 89. Right? So ADP non-farm showed a big drop in employment change, in non-farm employment change. However, on Friday we saw the official number or the government number come out as a big surprise to the upside. So this time round, showing 89 to 113, could that give us a hint? Could that give us a hint on what to expect on the non-farm employment change number later today? Put it into the chat. Let me know what do you think the number is going to be. In the 170 region, or do you think it's going to be another surprise in the 300 region? Okay. One other thing to note is also the JOLTS jobs openings that we saw on the 1st of November. It was 9.61 million, got revised down to 9.5. Was expecting 9.34, came out at 9.55. So that was a little bit of a surprise to the upside. Same thing here. Last month it was 8.83, it came out to 8.9, revised up to 8.9. Expected 8.81, came out at 9.61. So I'm working on drawing that correlation between the JOLTS jobs openings and the non-farm employment, the government non-farm employment change numbers. Still working on that, but so far it looks like this might give us a better hint of what the number could be. And in that sense, it looks like it might be slightly to the upside. Right? Thanks for answering that, Buba. Buba is expecting a lower than expected number. Pips Apprentice is guessing 300 plus. Anyone else? Who else is guessing those numbers? Let me know. And as you guess, do help me out. Click that like and subscribe button if you haven't already. I know many of you are very good with that. But for those of you who haven't already, do help me out. Click that like and subscribe. Whether you're on YouTube or on TradingView, thumbs up or that little rocket ship button does help. Okay? So what I'm thinking now, looking at this, unemployment rate likely to stay at 3.8. Average hourly earnings could be a 0.3, could be a 0.2 number. I did give you a little bit of a trick question, a trick answer, where I was asking you, do you think it will be 300 plus or 170 something? I actually anticipate, or I'm looking at this and I'm thinking that we might see this at maybe a 250 number. Yeah, Diana just read my mind. Diana just put in around 200K. Yeah, so I was thinking that this might be, no, it will slow down a little bit, but it might be at that 250 number. But I'll tell you, I've been trading the non-farm payrolls since 2018, thereabouts, right? Non-farm payroll since 2018. It's almost impossible to guess what the number is going to be, right? It's almost impossible to guess what the number is going to be. That's why it's very important to have many different scenarios or plan for the different scenarios. If we see it in the 300 region, very good number, what to expect on the dollar. If we see it in a maybe even an 89 or 98 number, a lot weaker, what to expect on the dollar, okay, and on the different setups. So we look at the different scenarios there. And then the ISM services PMI number still within that 53, expected to be within that 53 range in that expansionary phase. So I'm not too worried about that. Plus, is at 10 p.m. GMT plus 8. That's heading into the end of the week. I would probably be more watching that more, and then if I have a trade, I'll do that. If not, I'll call it to the end of the week and look into next week. As we are, hey Godfrey, how you doing? Goju says 210K. Okay, good. Ayakame says higher than forecasted, lower than previous. Higher than forecasted. Okay, so about the 200 range. Hyder says, I don't think we're going to get a crazy number. It'll be very close to the forecasted. It's about 170 range. Okay. As we are heading into as we're at the end of the week, heading into next week, let's look at some of the news. Oh, that's interesting. Some of the news into next week. That's a little bit of a surprise. I did not expect to see that. BOJ Governor Ueda speaking at a press conference in Nagoya. Maybe this might be the situation where we see significant volatility on the yen. So it's something I watch out for on Monday next week. On Tuesday next week, we have the Aussie with their interest rate decision. We did see CPI data for the Aussies climb up a little bit higher than expected, I think earlier this week or into last week. So that's going to come into play with this rate decision. Again, I don't think it was enough to cause the RBA to hike rates, but we're going to develop a better view of that on Tuesday or on Monday as we head to that rate decision on Tuesday, 11:30 a.m. Not much on Wednesday. Governor Bailey speaking at the Central Bank of Ireland. Not to worry about that. Thursday, we have Chinese CPI. Not to worry about that either. Powell, Fed Chair Powell speaking on Friday. Panel discussions about monetary policy challenges. Might see some increased volatility at that time, but that's at 3 a.m. GMT plus 8. So, something to consider and not much else. We might see, okay? So with what I'm seeing next week, Friday, not a lot of news right across the board. with the main ones being the RBA rate decision and also maybe Governor Weda might say something for the yen on Monday. Apart from those two, I think that we're likely to see more trending scenarios, hopefully more trending scenarios for next week. All right. Good morning, Ray. How are you doing? Buba says sometimes the dollar index react positively and on positive non-farm. Why? It does react. It does have a little bit of a tantrum, I would say, or the dollar index has a bit of a tantrum on the non-farm. It also comes into play on in terms of where the support levels are, where the resistance levels are, what other factors are in the rest of the world. We are looking at geopolitical conflicts right across the globe. We are looking at a bit of a change in the monetary policy stance, so that might influence how prices are moving. Like I was saying, we just had yesterday the FOMC, so we just saw, on Thursday, we just saw those big moves on the dollar. So it looks like it might be a little bit more subdued. So just watch out for the key levels. Okay, I don't know why I say resistance support. Okay. So with all that said, we do also have Canadian employment numbers. I'll tell you more about that as we look at the CAD. With all that said, now looking at the charts, and I'll tell you this is for today. I'm looking at the charts. It's brand new. I'm looking at it fresh, pretty much same as you guys. So I'll develop this view together with you all. All right. Um, Today is the 3rd of November. We were saying that the dollar index could close the gap. It did not close the gap, but it did come down to that 106 level. Okay, so this move is done. Take that away. And 61.8 is pretty much broken, but right, because it broke and then bounced back up. I'll keep that there for now just as a reference. What I'm anticipating, looking at the dollar here, is that it is pushing a little bit. It looks like it's pushing a little bit to the downside. Okay, you can take that one away. And late yesterday, we saw this bounce. We saw the dollar index bounce off that 106 level. Tested 38.2, failed to break above 38.2, and now it's trending back down. I would be interested to see if the dollar index can continue down towards that 105.70 level. Right, and you notice that it is well within this, or it's been staying within this range for October. What I'm looking out for is whether dollar index could go down to 105.70 and bounce back up. That's what I'm looking at. I I don't see it moving a lot right now. Or rather, I don't see a big reason it should be moving a lot right now. Two view is that it looks like it's going to come down, and then after that, might see that push back up. That's what I'm thinking. All right. So for now, until the non-farm employment change number, we might see this trade down. Continue on the trend, but with a support level here at 105.70, we see that reaction, very similar reaction along here. right? If it fails to break 105.70, we could see it rebound back up. So dollar index, I'm thinking that it could test 105.70, fail to break and bounce back up to 105, 106.30. There we go. Okay, so one thing you note is that I haven't done the same thing I usually do. Look at what happened on the 6th of October on the dollar index. You see, this is what happened on the 6th right there. This was the non-farm number. Okay, zoom in here. So this was a non-farm on the 6th where we saw that surprising 336 number being released. So the dollar index was trending down, came to that 106.30 level. On release of the news, we saw that spike up before coming back, continuing on the trend to the downside. So now coming to the current, I actually think now looking at this, we might see it sit at this level. I don't think it'll drop that much. I think it'll do that. Consolidate along 105.95 or 90. All right, and I think if we see a good non-farm number, so about that 200 range that we're all somewhat expecting, we might see that push up towards the 50 level, but I flip that around and think that it might come back down to the support at 105.70. I think that's a more reasonable view. Okay, so change this dollar index could consolidate along 105.90. A 200 plus NFP could lead the dollar index to bounce to about 106.50, 45, but continue trend lower later, something like that. Okay, you guys know what I mean. So basically what I'm saying is that it might consolidate along this level for now. If NFP gets released at about 200 plus, we might see that spike up towards that 106.45 level, and then after that it might come back down again, right? Because we do have that on downtrend, down trend lower to 105.70. Continue trend lower down to 105.70. Okay. Well, if it breaks 105, then we've got the next level down at 105.30 there. Okay, so that's the view on the dollar. Then looking at the pairs. Hey Ahmed, how you doing? Okay, Kiwi dollar. Anyone got onto that? Let me know. It was almost, right? So we're looking for the test lower before bouncing back up towards that resistance. It looked like it's on track to that level, right? So a good 50 pips move to the upside. If you got onto that, let me know. Now, that resistance is crucial. That resistance is crucial with That's a bit too near. Let me see what we have here. That's the 50 there. So we see this move came up to 23. 50% is right there. 61.8 is right there. Kiwi dollar looks like it needs to break this before we're going to see further upside towards 5970 or even 5990. Okay, so although we have this view, push up, come back down, I think what we could see here on the dollar. So in the flip side is now we're looking at some dollar consolidation. We might see that test, reject, and then push back up again on the Kiwi dollar. So what I'll be looking for, because we're still looking at generally short term, not click short, short term position, short term weakness or continued weakness on the dollar. So 5940, I got a 50 pip move to the upside. I would have a 20 pip stop loss, and we're looking for that. Okay, so it's a bit of an inverse of this. Looking for that, so we're looking for this to push up. Okay, so 5940 stop loss 20, take profit 50 to the upside. Looking for that on the Kiwi dollar, 261.8. I'm happy with that. So this we're looking at, it's on the dollar, continued dollar weakness scenario. Okay. So we look for that. Then onto the Aussie. Right, Aussie spiked up. If you did get into that as it broke up, you would have hit a stop of 20 pips. Right, would have hit a stop of 20 pips because we saw that very choppy movements. If I just took this right across to that previous high, 6460, stop loss 30 pips. We see this point there. We can take this to the max at 50. I think that's fair. I think that could be a trade, but we already have the Kiwi on a dollar weakness scenario breaking above the resistance. I like that a lot more than trying to trade the Aussie up to that resistance. What I would be keen to see on the Aussie or in another scenario is if it reverses. I think it's a little bit unlikely, but if it reverses, you might see that dollar strength continue all the way. This is now a support level. Right? And we might see this turn back down. So maybe what we'll see is that move on the Aussie. Dollar strength scenario. Okay, so we'll put that there. Okay, I think that it's 3 o'clock now, 4, 5, 6, 7, 8. There's 5 hours to go. I think if this continues pushing up, you don't want to be entering a trade because it's going to be right in the middle of that support and resistance level. Okay, so because of that, I think that if it continues pushing up, I would plan for that scenario that it retraces on a dollar strength scenario. 6430, 6420, just below that 23. That's a bit too wide. I think 6430 will be fair. 26 pips. And then we can go down to 60 to the downside. And that would be reasonable. I could even be, no, I'll keep it there. Okay, so that's what I'll look out for on the Aussie. 6430, 20, 26, 25 pips is fine. With 60 pip take profit to the downside on a dollar strength scenario. So we look to sell 0.6430, 25 to 60. 6430, stop loss 25, take profit 60 to the downside. Yeah, I think it's going to consolidate there. I'm thinking that it either bounce like that, or we could just see it go from here and break out lower. On a 200 plus number, I'm pretty sure that it's going to bounce and then turn back down, but I'm just considering whether it could come out at that. Yeah, the 200, 300 plus number, I think is going to bounce and come back down. I'm just thinking whether, it would even bounce. Maybe we'll see 100 and something, 100 something number, and we could see that just spike down towards that 105.30. But generally looking for that weakness scenario. We got a scenario here on strength, so we have that planned. On yen, I was so keen on this, right? I was watching that, it was dropping, almost broke 150, came down 61.8 there, did not trigger my trade, bounced right back up. I was like, oh, all that waiting. Okay, so it did not do that. It did not trigger the trade. I don't think it was, for that to have that big drop, was also waiting for the intervention. I think that in this scenario here on the yen, you do have a bit more options, right? You do have a bit more options, and I would say we can go a little bit lower here. 149.75. You have a 30 pip stop and a 140 pip take profit. Or on a dollar strength scenario, you would be looking at 150.60. Take profit 80 pips. So resumption of that upward push. Stop loss reasonably be 40. Okay, so I'll be looking for that. These levels hold, that's fine. These levels, 38.2 is right there, so it needs to break above 38.2 to climb up. That's reasonable. I think we have a straddle scenario here, a wide straddle scenario here on the yen. You can see dollar pushing it down a little bit. So, hey Ismet, how are you doing? It might come down, break. Okay, so we'll highlight these two levels, 150.60, 40 to 80. So on the US yen, I think that you have that both potential where you could buy at 150.40. Stop, it's not 40, dot 60. Dot 60. Stop loss of 40, take profit of 80, or you could be looking to sell at 149.75, stop loss of 30, take profit of 140. Okay, take that one away. I think that it could be either. I was going to say that I think that it's more likely to the downside, but I think it could be either, and it's a fair trade on either direction. Right, even if you don't catch this level down, you just catch that previous swing will be about 90 pips. Let's do that one. I don't think it'll drop 140. No reason for it to drop 140. I think 90 will be reasonable. Okay, so it's just that range that it needs to decide where it's heading towards. I'll be happy with that. Any questions so far? All good on the US yen? Put it into the chat. Let me know if it's all good or if you have any questions. Then the pound dollar almost did what I expected. It went up, came back down, but it only came to about. Oops, where did I do that? It only came to about 20 something pip move before it bounced back up, driven by the volatility of the dollar. So right now on the pound, with that move, I would say um, is valid set pending order. Yeah, I think that because it is a little bit wide at in reference to the US yen, because it's a little bit wide, you could set a pending order, but remember that it's even more dangerous to be setting a double, no, setting a pending order during a news, because what could happen, right? Imagine it sits there right now, and then the next moment it goes spike up. Okay, not that much. I got overexcited. It could sit there, and the next moment it spikes up, and then it comes right back down, and then it goes back up again, and then it does that. For example, right? So what would happen here? It would spike up, you would hit your buy, and then you would get a trade, go down, hit your stop loss, come down, hit your sell, go back up, hit your stop loss again, and you've lost two trades very quickly. And it could happen very, very quickly as well. So just be a bit more careful with that. Um, just something to understand if you're going to be setting the pending orders. Diana, no, not trading. I will be trading the news, but I'm not streaming today, right? Because we're going through the scenarios now already. Ahmed says, may see double bottom at 149.85, which is right there. I don't think it will be a very strong double bottom. With the way it's trending, we might see a double bottom. So what Ahmed is saying is that we might see this come down, form a double bottom, and then we might see that push back up. But I don't think so, right? If anything, maybe what you could more likely highlight is that inverted head and shoulder with the neckline there. So if it breaks up, you trigger a trade with an inverted head and shoulder move to the upside. Right? So either way is really possible. This, to trade it down, is really breaking of support, breaking the level, continuation to the downside. For it to bounce off this level, you could have a double bottom, you could have an inverted head and shoulder, you could just be a stronger dollar pushing it up. Oh yeah, I would be looking at I'm always looking at the charts, especially during news. Always want to try and catch something. Yeah, I will be. Okay, so yeah, that's actually very interesting there. So we could see that We also spot an inverted head and shoulder there. Oh, not that. We also spot a bit of an inverted head and shoulder there on the US key, on the US yen. Okay. All right. Then onto the pound. Give me a second. Let's check something. All right. Seems like it's okay. Then onto the pound, dollar 61.8. I think that with the move it was doing, we see that as a bit of a, not a great line. No. Okay, I see that pushing up. I see this consolidating along 61.8. It's right in the middle. And I don't want to give you everything. I don't want to highlight everything as, oh, you can buy, you can sell, but it's right at that point there. Looking at the euro, it's pushed up. I'm just trying to balance between the euro and the pound. That did quite well. That went up about 35. Okay. So I'll look at this and I'll consider the scenario that the dollar strengthens and it rejects 61.8. So we're looking at 1.2180. Stop loss, about 30 pips. Take profit, write down 70 pips to the downside here. Right? So I'm thinking this. So what I'm trying to think is I got pound dollar maybe coming to the downside. I have the euro dollar maybe bouncing, maybe continuing back up again. I don't want it too near as well. So 1.2180, stop loss 30, take profit 70. We'll have a look at how that plays out. So 1.2180, stop loss 30, take profit 70. To the downside, rejection of that 61.8 level, while on the euro dollar, this is broken already, so you can take that away. Double forming up. What I could be looking out for here is this push. Okay, so what I'll be looking for on the euro dollar. Okay, so before I forget, this is the DXY weakness. In this case, oh no, DXY strength, sorry. Mine's foggy today. Then onto the euro dollar, thinking that it might strengthen a little bit before pushing back up. Dollar index is, it's just sitting right there. So you can be looking for, in this case, 1.0635. Stop loss 20 pips, 25. Take profit 50 to the upside. Too many levels here. Take some of that away. That's a good strong support. Take that one away for now. Okay. So I'm looking at this. We see this pushing up a little bit. That's coming back down. That's reasonable. Okay. So looking at that, maybe testing a bit before pushing back up. One point three, 106.35, 50 and 25. 106.35, 25 here. Okay. Okay, so I'm happy with that. So I've got, dollar strength scenario here on the pound dollar rejecting 61.8. Looks like it's doing that now, but I'm going to give it a bit more time. Then euro dollar, I think that we could be looking at that weakness scenario. Ahmed said, and for me, euro dollar for more consolidation if US will be stronger. I think if US is stronger, it's going to come right back down, right? I think if US is stronger, it's going to come right back down. But just the way it's been climbing, I think that it would be more reasonable to see that push back up. Okay. Daily chart. Okay, let's see the daily. Yeah, you see, you can still see on the daily that it is pushing to that upside. All right, zoom in a little bit more. You can see that it's pushing right. It took right that to the upside, so I do anticipate another push back up again. Found that rejection along these levels. Yeah, it might consolidate there, but I think that the upside shows a little bit more potential. Okay, but yeah, good spot there, Ahmed. Thanks for that. And then Monsieur Delaros is asking for the pound yen. So we looked at the yen sitting right there. Does have either direction potential. Pound dollar at that 1.22 level now. Looks like it's breaking, could be heading lower. Then with that, looking at the pound yen, you notice that it is in that tight consolidation because the yen is consolidating. So the pound yen is just sitting right there. That's old. Take that away. It's found 38.2. Doesn't like 23.6. Could be pushing back up. Now, I would say that it depends. Pound yen is going to be really tricky. I wouldn't even recommend it because look at the US yen. If it pushes up, it would be because of dollar strength, right? If the US yen pushes up, it would be the dollar strength, which would lead to the pound dollar pushing down. Then you have the US yen going up, you have the pound dollar going down. When you look at the pound yen, it's going to push up before coming back down again. It's just which one's going to move more, whether the yen is going to move more or the pound dollar is going to move more. That is going to drive the pound yen. So I would just be extra cautious on that, just because of that. And you got 61.8 right there as well. Okay, so these would be my key levels on the pound yen. That's the support. That's the resistance. Based on this, right, if it breaks above 61.8, we only have that move towards that point there. So it's only a smallish move. So because of that, I would be more tempted towards it breaking that support and heading lower. But for it to break that support and head lower, yen needs to go down, pound could go back up. So I think it's going to be very choppy within this range. All right, Monsieur Delaros, hope that answers your question. It's right in the middle there. I think that you got a lot of other pairs to focus on rather than the pound yen, especially for today. Then on to the Swiss, well, within that range, very similar to the pound yen. It's well within that range. I would say that trending to the upside, pushing up, likely to be in the scenario where you can go for a cheeky one here where you look for that. Right, we could be looking for that. So I think that we might see that dollar strength push it up. That scenario, we're looking for that. So what you could be looking at here, and I rank this very low. Okay, I'll rank this very low, 9075, stop loss 30, take profit 75 to the downside, 70 to the downside. Or do nothing at all on the US Swiss franc. I think that, in a new scenario, you want to go for the easiest one. Life is hard enough. Keep it easy, keep it simple. Okay, so it's sell here at 9075, 30 to 75. 0.9075, 30 to 75. Then onto the US CAD. Pound Aussie is very nice pair for trade. Yeah, I've heard a lot of people talk a lot about Pound Aussie. I haven't really gotten to the hang of it. But yeah, I do know a lot of people who trade pound Aussie quite a lot. So US CAD or the Loonie did well for us yesterday with that setup, pushing to the downside. Would have hit your 70 pip take profit on that. I missed this trade. I'm not very happy. I missed this trade and it worked out very nicely. If any of you got onto the Loonie yesterday, do let me know. I'd love to find out. At this point, remember that we do have Canadian employment numbers to be released. Unemployment rate for the Canadians looking to go from 5.5 to 5.6%. Employment change looking to slow down slightly, 63 to 25. It has been climbing over the last couple of months. So it looks like we might actually be looking for it to trade down a little bit, drag down by the dollar, and then maybe find support to push back up. Okay, so this level is gone. Let's take that away. What I would be looking for at this point would be 1.3710. Take profit 120. I don't think I go 120. You can set 120 and then we'll see where it takes us from there. 30 pip stop loss. 30 pip stop, 120 take, back up. So we're looking for that bounce back up on the US CAD. I mean, if it breaks, it's a simple trade to the downside. You can look for that as a trending scenario, but that's a 30 pip stop as well and a 90 pip take. Trending scenario, looking for the reaction. I think this would be a fair one to look for reaction along that 1.37 level. Okay, so we have look for reaction at 1.37. You could be looking to buy at 3710, stop loss 30. Realistic take profit will be about 80, 90. Okay, so buy 1.3710, Stop loss 30, take profit 90, or you can be looking to sell at 1.3660, stop loss 30, take profit 90. 1.3660, stop loss 30, take profit 90. I think that's a fair one. That's something to pay attention to for today on the US CAD. I would definitely prefer the US CAD a lot more compared to the pound yen. Okay, so new hour, dollar index is still consolidating along that 106 level. 105.90, 106 is fair. Then onto gold. Right, gold, we were looking for it to break above and test 1992. It didn't do that. It came very close, but didn't do that. At this point now, I would say that it's gonna, I think it's gonna come up to 1995 and consolidate along that range. I think it's gonna go up 1975 and consolidate along that range there. I don't see a big move on gold at this point. Okay, so I think gold, it could climb to 1995 and consolidate. Okay, with there we have it. I think that there are a lot of interesting opportunities here, especially on the US yen, especially on the US CAD. Slightly more straightforward ones on the Kiwi, or on the Aussie as well. Hey Jamil, how you doing? We're almost done, Jamil. So that's going to consolidate. Forms a nice head and inverted head and shoulder. That's moving nicely. More straightforward. So it's a little bit more straightforward on the Aussie, on the pound, and maybe on the euro as well. And then we have good options on the US yen and on the CAD. I would not focus too much on the Swiss, and in fact, maybe not even too much on the Kiwi as well. Okay, so I hope you took notes. Right, if you haven't, this video is there for you guys to refer back to. Again, remember that yes, non-farm payrolls could have good volatility, could have good price movements, but don't feel like you have to rush into a trade. Don't feel like you have to take a trade. Pound Aussie, pound dollar. If the pound dollar keeps heading lower, I would say pound Aussie could trade lower. You would want it to very far away. Hang on, let me just do new lines. It's been a long time since we looked at this. Check the sorry, I'm just gonna check the H4 because it's a bit too small to look at now. We definitely have a level here. That's a big strong support, which coincides with this point as well. Beyond that, hey JMB, how you doing? You guys been quiet at the start. You're most welcome, Diana. Thanks for that, Ayakami. Very nice, Jamil. Thanks, Pips Apprentice. Thanks, Goju. Thanks, Laney. We're looking at the pound Aussie, so I haven't tuned off yet. Okay, so now with that, with those levels on the supports, I would say there is good potential for a big move, but I don't see why it would move that much, right? If you sold this, I don't see a 300 pip move. That's a bit crazy. Back to the H4. We have a couple of, okay, there's one level here. And then another one about there. So back to the H1, on the current. If the pound dollar continues to drop, then you could be looking at a sell 1.8845, 1.8840, stop loss 30 pips, take profit 90 pips to the downside on the pound Aussie, anticipating that pound dollar to continue lower. Pound dollar is, yeah, looking like it's trying to push lower. Okay, hope I answered your question there, Ahmed, on the pound Aussie. Pound dollar hit my sell, my TP, good. Thank you, Diana. No worries, Ahmed. Hope it aligns with your thought as well. Okay, so with all that said, please don't feel like you have to rush into trades. There are times where it's a news event and you just don't enter any trades. That's not uncommon, especially nowadays. So, and I take a good profit, Jin. Thanks for fantastic, Jamil. I'm very happy to see to hear you taking profit on your trades. Very nice. Okay, so I'll see you all on Discord. Again, if you haven't already, do make sure you join. And please help me out. Click that like and subscribe button. If you have any questions, put into Discord, let me know. Trade well, trade safe. Have a great weekend ahead. And I'll see you all next week. Same time, same place. Take care now. Bye-bye.